Pay close attention to what I'm about to reveal, because your financial wealth and your family's security depend entirely on you understanding the mathematical gravity of this moment. Immediately forget any idea that this video is a financial conspiracy theory, mere alarmist clickbait, or cheap internet speculation. What we're going to dissect here, with the precision of a surgeon operating on a time bomb, is a brutal systemic anomaly that is already corroding the foundations of the global financial market at this very moment, while the world sleeps anesthetized. The mainstream corporate media, traditional newspapers, and analysts in well-tailored suits are deliberately hiding this implosion from you, creating a comforting smokescreen to avoid widespread panic. They need you to remain blind and operating on autopilot, while smart money empties its coffers and positions itself for impact. The trigger for this death spiral has already been activated, and the numbers are mathematically irrefutable for anyone who knows where to look. At this very moment, the precious metals market is facing an unprecedented evaporation of liquidity in modern history. The March COMEX contract accumulates a staggering 222 million ounces in open positions, but the physically recorded and genuinely available stock for delivery is stuck at a paltry 88 million. We are talking about a massive structural deficit of over 130 million ounces of silver that simply do not exist in the vault. To irreversibly exacerbate this systemic trap, recyclers in primary Asian centers, specifically in Shenzhen, are already paying up to $93 per physical ounce. This represents an emergency premium of almost $9 above the illusory fantasy priced into Western futures contracts, exposing the monumental fraud of our financial system. This abysmal difference is not a mere market discrepancy. It is the thunderous sound of the gears of the Western banking system breaking under the weight of decades of manipulation and rehypothesizing of assets they never actually owned. While news anchors continue to debate empty political narratives and shallow central bank interest rates, a seismic and silent transfer of wealth is occurring from west to east in real time. You have a brutally narrow and rapidly closing window of opportunity to understand this architecture of collapse and shield your capital before the liquidity floodgates are permanently locked and you are held hostage by the institutions. To understand the sheer gravity of this impending collapse, you first need to swallow the red pill and see through the colossal illusion of our system. The security most people feel when looking at their portfolios on brokerage screens is a meticulously designed mathematical fraud. For decades, Western megabanks have operated the largest rehypothecary scheme in financial history, selling the very same physical asset multiple times through derivatives, the infamous paper receipts. Imagine a corrupt builder selling the same house to 100 different families, relying on the naivete that they will never try to move into the property on the same day. This is the rotten foundation of the precious metals market, a house of cards built on the empty promise that financial liquidity will always mask the scandalous absence of tangible assets in the deep vaults of Wall Street. The mechanics behind this implosion resemble a global plumbing system suddenly clogged by unsustainable pressures. The over-the-counter market blindly relied on an informal cushion of interbank liquidity to roll over these contracts endlessly. However, the LBMA's leasing rates, the backbone of the London market, recently exploded viscerally. The interbank silver lending market simply froze, a glaring red flag that the central plumbing of the financial system has burst and mutual trust has evaporated. Banks are now desperate, forced to seek physical metal from the public because the gears of institutional trust have stopped turning. When market makers themselves refuse to lend to each other, the gears break, the facade melts, and the harsh reality of the physical deficit brutally imposes itself. The system is suffocating under its own suicidal over-leveraging. The crucial problem is that the current ratio between paper contracts and physical metal is a mathematical impossibility that guarantees disaster. With 222 million ounces contractually enforceable against a mere 88 million in the recorded vaults, the dominoes are already falling in slow motion. It only takes a tiny, insignificant fraction of paper contract holders demanding physical delivery of the metal instead of accepting rollover to the next month or pathetic settlement in fiat currency to trigger an unprecedented technical default. There is no way to create physical matter from central bank money printers. The systemic trap is set, and the trigger is the simple contractual requirement of actual possession. When the music stops and investors demand their seats, the overwhelming majority will discover they bought nothing but air, and the external trigger accelerating this death spiral comes from Asia, through relentless industrial demand that has torn apart the Western narrative. The global market has silently and lethally entered its sixth consecutive year of chronic structural deficit. Projections point to a colossal shortfall of 300 million ounces against an anemic global mine production unable to meet technological hunger. While Western banks continue to artificially suppress the price through the virtual dilution of paper futures contracts, the East is physically draining the world's coffers. This relentless force has completely crushed the arbitrage between the derivatives claim and the tangible physical metal. The farce of the infinite supply of paper has collided head-on with the concrete wall of real physical scarcity, and the result is an exposed fracture in the global pricing system. The architects of this ticking time bomb, such as J.P. Morgan and other institutional titans, now find themselves trapped in a systemic trap of apocalyptic proportions. If they attempt to cover these massive short positions by injecting liquidity into the open market to find the physical metal, they will inevitably absorb all remaining global supply. This desperate maneuver would trigger a historic industrial short squeeze, a violent and uncontrollable compression that would send prices exploding to unimaginable levels, destroying entire industries that depend on silver as an essential raw material. The attempt to save the bank's balance sheets would result in the immediate and violent annihilation of those on the short side, a true financial carnage. Liquidity would simply evaporate from the market overnight, leaving a trail of institutional insolvency that would make the 2008 subprime financial crisis seem like a mere corporate setback. On the other hand, if these same market makers decide to arbitrarily change the rules of the game mid-match, forcing a cash-only settlement clause, the result will be equally catastrophic for the West. By blocking physical delivery and shoving devalued dollars down investors' throats, they will instantly and permanently destroy confidence in the Western benchmark price. This cowardly maneuver would hand over, on a silver platter, absolute control of global metal pricing to the Shanghai Gold Exchange. Western financial hegemony would commit suicide live, transferring the power to dictate prices to the Eastern powers that possess the real gold and silver. The remortgage castle will collapse, and whoever is holding Western paper receipts will feel the true terror of holding worthless credit against a financially bankrupt and morally corrupt institution. To shield your mind from the comforting lies of the financial system, we need to look at the irrefutable scars of the past that the mainstream media tries to erase from your memory. What you are witnessing now in the bowels of COMEX is not an unprecedented event or an isolated anomaly in time, but the amplified and terrifying repetition of the silver market collapse of the 70s. Back then, the Hunt brothers tried to corner the physical market and systemic stress reached such a violent breaking point that paper margins simply couldn't contain the explosion of real prices. The crucial and devastating difference now is that we are not dealing with a handful of ambitious Texan billionaires trying to bend institutional rules to their advantage. Today, the actors who are cornering Wall Street are absolute sovereign powers and entire geopolitical blocs thirsty for tangible assets. The historical pattern of institutional survival has dictated exactly what will happen next, and anyone who ignores this visceral warning will lose absolutely everything when the trapdoor opens. In the 70s, when Western commodity exchanges realized that the physical delivery of metal would lead them to immediate bankruptcy, they did not hesitate to commit the greatest financial atrocity against ordinary investors. COMEX arbitrarily altered the rules of the game in the dead of night to liquidation only, brutally forcing the sale of contracts and prohibiting new purchases of physical assets by the general public. The logic of the system's controllers is perverse but immutable. If they are losing in the derivatives casino, they simply change the gravity of the room to ensure the house never breaks. The vital signs of this same draconian intervention are already flashing red on modern institutional control panels. The documentary proof of this trap orchestrated by the elites is not speculation, but a historical fact set in stone and hidden by the establishment to keep you docile and ignorant. A confidential and recently declassified diplomatic cable from the United States Embassy, dated 1974, exposes the true engineering behind the global pricing of precious metals. This official document explicitly states that the creation of a gigantic futures market for paper derivatives would primarily serve to generate constant artificial volatility, scare conservative long-term investors, and relentlessly suppress demand for the physical asset. The COMEX fractional reserve system was born with the explicit purpose of being a virtual dilution mechanism designed to mask the devaluation of fiat currency and maintain the illusion of American economic control over the tangible assets of planet Earth. What happened before is happening now, but with a multiplied gravitational force that will mercilessly crush the capital of those who continue to trust in the promises of the broken banking system. The People's Bank of China and the insatiable Asian industrial machine are, at this very millisecond, meticulously exploiting this historical weakness designed by the Americans themselves in the 70s. They are surgically and lethally draining the physical metal that anchors this entire fraudulent Western paper casino, transferring real wealth to the armored vaults of the East. Those who close their eyes to the mathematical signs of 1929 or 2008 were brutally pulverized by the death spiral of liquidity evaporation. History proves beyond a shadow of a doubt that the illusion of paper always collapses before the undeniable force of the scarcity of irrefutable physical assets. The biggest and most dangerous lie that the traditional financial media whispers in your ears every morning is the sweet illusion that the central bank will be your last-minute savior. Wake up to the mathematical reality of this systemic implosion. Government institutions and large corporations cannot rescue this market because they are themselves hostages to the suicidal leverage they created. For the first time in contemporary economic history, the architects of monetary control find themselves cornered between a rock and a hard place, devoid of miraculous tools or magical trillion-dollar bailouts. The money-printing machine, which has always served as the convenient lifeboat of the broken system, has now become the leaden anchor that will sink us all. Any desperate attempt at state intervention will not be a lifeline, but rather the ultimate fuel that will accelerate our inevitable death spiral. If the Federal Reserve and the cartel of central banks decide to intervene to save the brokerages from a humiliating physical default, the only tool left to them is the indiscriminate and violent injection of artificial capital. They would have to print trillions of dollars out of thin air just to try to buy the physical silver available on the open market, paying the extortionate premiums demanded by the East. The result of this suicidal maneuver would be rampant and terminal inflation, instantly destroying the purchasing power of 100% of the population and annihilating the value of our fiat currency. You would see the daily cost of living explode in a matter of weeks, while the paper money in your wallet melts like ice in an industrial furnace. Saving the liquidity of half a dozen megabanks would mean sacrificing the food and energy survival of entire societies on the altar of financial remortgaging. The other side of this institutional trap is even darker and more totalitarian for the intelligent individual trying to protect their assets from disguised confiscation. If the system refuses to hyperinflate the currency to cover the metals fraud, the only remaining technical alternative is to force an absolute freeze, jamming the gears with draconian capital controls. They will decree instant bank holidays, suspend physical deliveries on the COMEX, and force you to accept a pathetic settlement in devalued fiat money. Your theoretically safe assets will be caged in a digital ecosystem you don't control, under the cynical pretense of protecting the market against malicious speculators. It's the perfect systemic trap. Either they destroy the value of your money with hyperinflation, or they simply lock away your access to the capital itself, expropriating your wealth through emergency government decrees. The large Wall Street corporations and the gigantic pension funds, which manage trillions of dollars from the lay public, are also blind and immobilized in the face of this undeniable structural implosion. They are shackled by obsolete statutes that force them to keep capital allocated to government debt securities that lose real value daily and to shares in companies suffocated by the scarcity of critical raw materials. When the shock of the lack of industrial silver paralyzes the production lines of the technology, military defense, and renewable energy sectors, the balance sheets of these companies will suffer an irretrievable hemorrhage of profits. The traditional and conservative portfolio, meticulously designed to protect the average citizen, will be transformed into the epicenter of this decade's wealth evaporation. Corporate safeguards will fail simultaneously because they all depend on the same false premise that infinite liquidity will always supply the absence of scarce physical resources. We have already passed the point of no return, that invisible line where pure, callous mathematics replaces the irrational hope of old guard market analysts. In 2026, there is no longer room for half measures or blind trust in institutions that have already proven their utter incompetence and bad faith in managing our capital. The government is not your protective shield. It is the negligent architect who planted the dynamite in the foundation of the global financial edifice. The tension now boils down to a brutal and silent struggle between the astute individual who recognizes the warning signs of impending catastrophe and the desperate state bureaucratic machine struggling for survival. To avoid being crushed by the gears of this engineered collapse, you need to immediately divorce yourself from systemic dependence and take physical and tactical control of your own inalienable financial destiny. The reward for your brutal attention so far is not just financial survival, but the greatest asymmetrical transfer of wealth of this bloody decade. The first vital step, your impenetrable shield, is the physical and strictly allocated possession of silver and gold entirely outside the traditional banking system and the corrupt COMEX settlement network. If your metal is stuck in a paper index fund, like a conventional unallocated ETF, you are literally the unsecured creditor in the liquidity bankruptcy of an irresponsible banker. Absolute defense requires zeroing counterparty risk today by storing physical bars or coins in private jurisdictions and independent vaults, far from the clutches of state confiscation. You need to enjoy the anomaly where the West prices silver at a paltry $84, while Asia is already swallowing the physical market at over $90 per ounce. The second asymmetrical move, its attack blade against the collapsing system, is to buy the brutal distortion at the base of the production chain. The strategic target is the mid-sized silver mining companies, the mid-tiers, and the royalty companies established in geopolitically safe and stable jurisdictions. The essential and non-negotiable filter here is that these companies have not engaged in hedging operations, locking in the sale of their future production at depressed Western prices. At this very moment, the myopic market is valuing these stocks based on the fraudulent paper price of $84. However, the cash flows of these companies will very soon reflect the true and violent price discovery dictated by Asian physical bids. When the Eastern premium is priced into the West, you will see profit asymmetries exceeding 300% in these assets within a few months. The third and definitive counterflow tactic is the immediate and ruthless evacuation of all illusory derivatives and synthetic contracts from your investment portfolio. You must ruthlessly liquidate your positions in bank receipts, unallocated funds, or any instrument that promises the price of silver without guaranteeing its tangible and unquestionable ownership. Before the next LBMA liquidation window in the middle of this semester, you need to convert 99% of your exposure to paper money into real and unconfiscatable assets. This is the pure essence of visceral defensive positioning, getting out of a burning theater before the panicked mob realizes the emergency doors are locked from the inside. The intelligent individual withdraws their capital from the rigged roulette table of the broken system and positions themselves as a creditor of undeniable physical assets. What we dissect today is not the end of the story, but merely the grim prologue to an ongoing and relentless financial collapse. The structural liquidity crisis that is dismembering COMEX and the LBMA will not stop for you to breathe or consult your bank manager. The coming months will be defining for the transfer of global wealth, and you will need constant tactical radar to avoid being caught in the line of fire of asset annihilation. That is precisely why I urge you to subscribe to this channel right now and activate all notifications without hesitation. We are your primary source of continuous intelligence, the beacon of sobriety amidst the fog of corporate misinformation. Following this channel is the brutal, mathematical difference between being the architect of your survival or the next statistical victim of the system. While the mainstream media continues to anesthetize 80% of the population with useless headlines, we will continue tracking inventory anomalies and the silent movements of the East. Data from the Silver Institute has already confirmed the lethal deficit for this year, 2026, and upcoming quarterly delivery reports will reveal even deeper fractures in the institutional facade. The ultimate tension is between you, the perceptive individual who sees the big picture, and a rotten state machine that will try to confiscate your future through inflation and lies. The broken system needs your silence and inertia to survive another cycle of structural plunder. Signing up here is declaring intellectual independence, guaranteeing real-time access to the asymmetrical maneuvers that the financial elite uses behind closed doors while the world burns. Now I need you to scroll down to the comments section and answer a direct, tactical, and brutally honest question about your current position. What exact percentage of your assets are still trapped in the illusion of fractional reserve banking and paper derivatives without physical backing? Are you holding tangible metals out of reach of Wall Street, or are you still entrusting your capital to an unallocated fund that could evaporate on a bank holiday next Monday? Don't mask your reality. Write your financial diagnosis in the comments below, because the first step to escaping this systemic trap is to publicly acknowledge the level of your exposure to counterparty risk. Your answer will serve as a mirror of the fragility that surrounds us, and as a warning to the other sentinels who follow our work. This comment section below the video isn't just an ordinary internet forum, but a veritable war room and a stronghold of decentralized intelligence. When you share your hedging strategy and expose the weaknesses of your portfolio, we build a wall of collective knowledge against the disinformation orchestrated by financial elites. The incisive and visceral debate we have here strengthens our community and accelerates the adoption of the asymmetrical plays we discuss. Discuss amongst yourselves, analyze the movements of Eastern markets, and debunk the peaceful narratives your local newspaper will try to sell tomorrow morning. This platform's algorithm tries to bury the inconvenient truth under mountains of cheap entertainment, but our relentless and calculated engagement breaks through this silent censorship. Our strength lies in the unity of those who refuse to go down with the fiduciary ship. The global liquidity clock is ticking down, and institutional coffers are bleeding at a rate that defies the mathematics of the traditional system. Remember this absolute rule: the financial market narrative is always based on fabricated headlines, but the brutal and undeniable reality is based solely on physical inventories. You now possess the blueprint of this minefield and the unique tools to convert herd panic into unquestionable generational profit. Keep your mind sharp, question absolutely all government guarantees, and protect your tangible capital as if your very life depended on it, because financially it does. Be prepared to act with extreme composure when panic takes hold in the streets, because we will be here dissecting every move of this impending ruin. Stay on high alert, trust only real assets, and until our next critical broadcast.